Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, December 5th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Tuesday, everyone. Here's a look at the daily time frame of the ES. Right now, a narrow range developing above the previous key range high here. That key range high is the top of this range that is developed from the impulse low here up to the impulse high back to the mid. We have this box here that's developed. The 150% target, or 100% target rather, is right here. We came back across the range, sitting right on top now. So very important range here. A failure at the bottom of the range, 47.75, opens up a rotation back across the range into 43.65 with a mid test at 44.56. So that's the failure potential here. At the moment, this market is still working its way down to the previous week's low, which is that low right there, and that's 44.75s. We have a bit of an expanding range that's developing up here with about 45.70 is that kind of mid apex level of the expanding range, which means we could drop a little bit lower here, find a high rally, come back, drop down, and then find maybe a key range that takes us into the end of the year. So we could continue to gyrate back and forth. We really haven't seen any expansion attempts out of this range. This I don't see as an expansion event attempt on Friday. It was a widening event here for a trap back down. So right now we still have a developing range that is building energy for the next breakout opportunity. And if we fail at this top end, we start working our way down toward 43.65. Overall, we still haven't tested the high here of the year. That's 46.34.5. We could still go get that high. So if we drop down and find a strong low, we may be able to snap back to that high and continue to build out this range at these highs. All right, let's take a look here at the NQ. Similar price action for the NQ, only this one has gotten a modest breakdown from this range. Narrow 12-day range. This range is developed at the highs of the year, at the previous quarter's highs. Very narrow range, which has about 1,000 to 1,200 points of energy built into that range. That amount of fuel could be released to the downside here as we break down or attempt to break down. To stay below the bottom of this range here would open up a return back to the midpoint of the previous month's range and also to the midpoint of this key range as well. A similar key range to what we just talked about here in the ES, a similar range, a failure back below 15.661 would open up a return back across the range, perhaps as low as 14.750. So big time zone right here. Again, this is not the biggest break just yet. We could, like we just mentioned with the ES, continue to develop an expanding range where this thing comes back to these highs, come back, and build out a little bit more. So watching the previous session's midpoint here, 873, a push through that can start to open up some strength in the near term. All right, let's take a look here at crude oil. Crude continues on its path lower. We've seen a big strong rejection here, a day one rejection on a swing basis on the on this trend line right here, that upper trend line. Third test on that line on a medium term basis has led to new lows each and every time. Very close to new lows now. Early pullback to the previous session's mid has been rejected or defended at least early on, and that could lead to new lows up ahead. We're still looking for that level to be tested. That's 69.69, previous quarter's low. Previous year's low is 70, so we're looking for a drop into that zone, maybe as deep as 68 up ahead. 68 would be the 100% target from this key range. To break it to the downside, we've now reached the 50%. The 100 would be right here at 68. So still looking for more downside ahead. Bears looking to defend with a continuation to the downside likely ahead. Any test into 75s, likely an opportunity for bears to defend until proven otherwise. Looking at gold now. Gold, massive rejection in the previous session. Day one rejection. This was a huge move Sunday evening to the upside of 2152, a massive rejection back down. This day's range was by far one of the biggest ranges we've seen to date. over 100 points for that day. It was a 505% of ADR day, 500%, so 5 times the average range. That's what yesterday's range was. So right away, it's a major day one rejection at the edge. It's a major failure at the 2080 level. And after such a high range day, you would expect a smaller range day today, compression, digestion with a downward bias. This rejection at the edge of the 4-year range, which goes from 2080 down to 1680, the midpoint is 1880, so that's half the range. A rejection at this edge would bring you back toward the midpoint of that range at 1880. The quick reversal would take you back to 1950, which is value. That is year-to-date VWAP, which is flat. It's also the 200-day moving average, 1950. So 1950 could be a very doable target by the end of the year. So by the end of the year, do we get back to 1950? Maybe we see some overage into 1880 or down to 1810 to begin early next year. So big day one rejection. Are the bulls dead here? If price can push back through 2080, things get back alive, but any pullback to that zone could be defended until proven otherwise for a push downward. All right, let's take a look lastly here at the YM. The YM right now with a narrow range of 99 points. 99 points inside day. A bit of a potential hanging man pattern developing here. We're getting back-to-back developing signals here at R3 on the PivotBoss bands for the year. We have a flat bands for the year, very mature bands. You can see here VWAP has been flat, third standard deviation above, third standard deviation below. We've stayed mostly in the second standard deviation, and now we're testing the outer edge. These are the highs here into 36.8. 36.8, the final frontier of key range or key levels here on the market structure basis. We bounced off the 31.8 to begin the year. We had 32.8, 33.8, 34.8, 35.8, and now the last one is 36.8. Do we go grab that before we turn back down? But we're getting close here to perhaps seeing either a pullback outright or some range-bound action, because this up move has been tremendous in its intensity and how far and fast it's gone. But at some point here, we may need to digest that recent price action. A failure to hold 35.8 would open up a bit more pullback. So right now, not eager to sell into this strength, but we could begin to see this market either pull back a bit or go range bound, as the distance traveled here has been fast and furious in such a short time. So keeping an eye on this range here and watching 35.8. All right, that is it for now. We'll see how this develops here heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.